It's about that time of day again. My name is Joseph. Thursday evening, February the 15th. Welcome back to your nightly newsletter. Tonight we're covering crude oil, S&P, Nasdaq, gold, and euro. Starting off tonight on crude oil, crude is bullish after a perfect two-legged pullback and a retest of the high. So now we need to see one of two scenarios, either acceptance or rejection, before we know where the most reliable buying opportunities will be tomorrow. The S&P is also bullish and trying to reach the prior week high, and a spike in channel pattern tells me to look for buying opportunities with a two-legged pullback tomorrow morning. Nasdaq is bullish and trying to finish rotation up to the high of a channel. But this strong bull run today tells me to wait for buying opportunities with pullbacks to support levels down below the moving average tomorrow. Gold is bullish with a big spike in range pattern, telling me to look for buying opportunities using the old fake out breakout pullback pattern. And the euro is also bullish with its own spike in range pattern tonight, telling me to look for seller failures down below the range for the most reliable buying opportunities on Friday. Boy, we get a great setup for tomorrow's session. We get some big, strong trends. We get some trading ranges and some weekly levels on the chart for Friday, setting up for an awesome opportunity to earn some profit to finish the week ahead of a holiday weekend here in the U.S. Before we jump in and put the plan together for Friday's session, I want to remind you, if you're on YouTube right now, give me a thumbs up if you find value. Make sure to subscribe to our channel and hit that little bell icon so you always get notified of all of my new videos. And if you have any questions about any of the topics covered tonight, don't forget you can always post the comments in the comment section below. If you're here on the blog at sidewaysmarkets.com, don't forget to join our mailing list. I'll send you an email every evening when our nightly newsletter goes live. Also, while you're here, don't forget I'm always posting exclusive content, charts, links, and updates throughout the week on my social media channels, so follow me on social. And speaking of charts, how easy is this? How nice is this? All the charts from tonight's video, you can have them on your computer ready for tomorrow, right where it says click here to download today's charts. And speaking of tomorrow's session, grab that free pass. Upper right-hand corner, come out and grab that free pass. Come join me in the trade room as a guest. I'll tell you right now, you're going to learn more on that free pass than you will anywhere else on the interwebs. I can almost guarantee you that. And if you have any questions, don't forget, if you're here on the blog, I'm always here to help. I'm hanging out on live support, ready to answer all of your questions. So post your questions in the live support on the right-hand side of the website, or if you're on YouTube, post those questions in the comment section below. And all the specific links for the free trial, the free pass, the charts, everything, if you're on YouTube, is in the description below that YouTube video. All right, enough of the intro. Let's jump right in. Tomorrow is Friday, February the 16th. What do we have here on the schedule for tomorrow? First things first, we are going into a holiday weekend. Next Monday, the 19th, is the President's Day holiday. Banks are closed, schools are closed here in the United States. Now, of course, the markets are global markets, which means the markets will be open technically on Monday's session. According to the CME holiday calendar, right, we have a full session scheduled for Monday. Just make sure you're aware, though, that volume will be about half as much as we normally get. So if you do choose to trade on President's Day, get to it early, follow that plan, be disciplined, not to chase after, because things do tend to get a little bit loosey-goosey as we get later in the day on that holiday. So get to it early. I would imagine if you do try trading on Monday morning, anything after 10:30, 10:45 is going to be really, really sluggish. So holiday weekend coming up. Right, we will be trading tomorrow, obviously, in our trade room for a full session tomorrow, but we will be closed on Monday for the holidays. The next newsletter will be next Tuesday evening, right? So no newsletter on Monday for the holiday. Other than that, let's see what we have here for news here tonight. No major news in the overnight session, right? So no major news in the overnight Asian session. What do we have here for tomorrow? We got a bunch of news here tomorrow morning, all weighted early in the session. We got retail sales at 4:30 a.m. if you're trading the overnight London session. And then, of course, we got housing starts here tomorrow at 8:30 a.m. Eastern time if you're going to join me in the U.S. morning session. That's it for trade for news tomorrow morning. So, again, you got a holiday weekend coming up, right? So, remember, Monday our trade room is closed, but markets are open. Be careful on Monday. Overnight news, 4:30 a.m. Tomorrow, housing starts 8:30. We'll be in our trade room tomorrow, right, 8 o'clock Eastern time, and we'll trade the strategy together. Couple more things I want you to remember about a Friday session, right? Two things specifically. Anytime we talk about a Friday, I always think early in and early out. What that means to you is anything after 11 o'clock Eastern time on a Friday should be considered to be lower probability. Yes, you will probably see the markets moving after 11 o'clock on Friday. They're going to move all the way until they close at 5 o'clock Eastern time tomorrow night. The problem, though, is that at the end of the week, we have a combination of two things. One is bigger risk taking, and two is lower overall volume, lower liquidity. Basically, towards the end of the week, and this also goes to the end of the month, human beings, traders, typically take bigger risks. They're more risk tolerant because either they've lost money and they want to make it back, or they've made money and they feel like they're trading with house money. So traders typically take bigger risks as we go into the end of the week. So be aware of that. At the same time, the volume drops as we go into the end of the day on Friday. That's because experienced traders know better than giving back money they've made late in the day on Friday. Right? So as always, we plan on having a great morning session on Friday. Be very careful about trading again after 11 o'clock as we go into lunch and into the afternoon session. When you combine that lower volume with higher risk taking, it creates a cocktail for disaster for rookie traders who may not be aware to spot some of the signs of manipulation that come into the market late in the day on Friday. So early in, early out. The second piece of the puzzle, and very, very important for tonight's newsletter, are those prior week open, high, low, close levels. Specifically, the high, the low, and the closing prices. Okay, the opening price, not so important, but the high, low, and close, right? The H, L, and the C. So last week's high, last week's low, last week's closing price. Those become price magnets. They become easy magnets that when they start showing up on the charts, traders start to use them as targets. So be aware of that. And tomorrow, we're going to see a bunch of these markets trading around those prior week levels, and you're going to see them tonight on the charts. So we got some news tomorrow morning. We want to get to it early tomorrow. Okay, there's no real telling what a holiday weekend can do as far as slowing down volume, right, and slowing down price action. So get to it early, right, because we got a holiday weekend coming around the corner. And again, prior week open, high, low levels, open, high, low, close levels. Watch those levels tomorrow because they will act as kind of sticky price magnets. So now that we know the plan for tomorrow, now let's jump in and take a look at the charts. Jumping in first of all tonight, we'll go crude oil. Then we'll grab some Eminis. We'll go to gold, and we'll wrap up on the euro tonight. Starting off with crude, the black gold, the Texas T, we're bullish after a beautiful two-legged pullback, followed by seller failure with the moving average and a retest of today's high. Picture perfect, two-legged pullback, seller failure with the moving average, and retest of the high. We talk about this all the time on this nightly newsletter. This is a great example of the bulls completing their short-term objective. If they push through the high, we can now assume they want to run to the top of that channel, or maybe even a big, massive measured move early to mid next week. If they can't push through this high, then we expect to see bulls take some profit, which will usually result in a two-legged pullback, and I'll be looking for buying opportunities at support levels waiting below tomorrow. So, really good example here. We had a strong move up, right, in yesterday's session. Right, if you recall from yesterday, strong move up. And as I mentioned just over and over and over again in this newsletter, anytime we have a strong move in one direction, we expect to see a two-legged pullback, a failure at the moving average, and a retest of that high. I think I probably repeat this kind of phrase or mantra probably 10 times every night, right, on this newsletter. So here we are now. We have completed the mission. We have completed the objective. Now the big question is, do we go higher? Do we push through these highs up to the high of a pending channel, up to a large measured move? Yeah, it's a pretty big measured move, but it's not out of reach though for bulls on oil. Or do we pull back off this high? Pull back to a level of support, right? Prior swings, rising support, right? So where should we go next, right? Do we go higher or do we go lower? If I obviously knew that, right, I'd be sitting on a private island somewhere with Oprah and Branson right now. But I don't. So like everybody else, I have to wait and see where we go next. The bottom line is we can assume that buyers are going to take some profit up here. So of course, scenario 1 would be a pullback off that high. Scenario 2 would be the move going through. Okay, so we have a rising support trend line. That'll be support. We have a prior swing. That will be support. Right, so those will be our key levels of support. Looking at a pullback, right, look at how the market pulled back here. Notice how I draw that trend line coming down. I was looking for, right, that trend line to be tested and then into it, right? So think about the same thing happening here for tomorrow. Pull back off the trend line, up, down, into a moving average test. Failure at the moving average, up, pull back, and go. So there are 3 ways to trade this. Most aggressive, 2-legged pullback. A lot more reliable, failure at the moving average. The most reliable, but of course the least amount of profit potential, right? That's how it always goes, right? You're always going to be playing that balancing act, right? Between reliability and profit, right? And I always talk about the fact that we'll gladly trade profit for reliability. Right, I would much rather have a high winning ratio, but make a little bit less profit. Wouldn't you agree? Right? If I told you your winning ratio was going to be 35%, right, but you were making some good profit, but then I said, but wait a second, you could have an 80% winning ratio for just a little bit less profit. You'd probably take me up on the offer for more probability, right? More reliability, higher winning ratio. It's just easier, right? Trading's easier, it's less stressful, it's fun, right? So that's a good example of 2-legged pullback, failure, right? Pull back and back up to retest that high. And again, we know that the most profit is off that deep 2-legged pullback. But sometimes, like we saw today, it can be difficult to kind of catch that falling knife. And it can be really difficult to try to stand in front of that freight train, right, as it's running lower. So rather than buying that 2-legged pullback, why not wait now for the failure? Wait for the failure at the moving average, right? Wait for those sellers to show us they want to sell at that moving average, and then look for it to shoot back above the moving average, right? See, that tells you right there that you got sellers pinned, right? You get them trapped. And once that market runs higher, the sellers are going to freak out. They're going to become buyers because that's the only way to get out of a short position, and it will throw gasoline, no pun intended, right, on the fire going higher, right? A lot more reliable that way. Again, a little bit less profit, but a whole lot more reliable and a lot easier on the mindset, right? Well, then, of course, then you get the pullback pattern, right? The pullback pattern comes next. Let's go back out here, right? Then you get the pullback pattern. The pullback pattern at this point, there's so much proof, right? There's so much proof at this point. We know the bears failed. We know where they're going. They're going back to that high, right? So there's a lot more reliability on that pattern, right? Would you trade probability for a little bit less profit? Most traders would. Most experienced traders would say, yeah, I would gladly make a little bit less money because I can always trade a bigger position size to make more money to offset, right, a higher winning percentage. So a really good example there of what we're looking for tomorrow if we can get the nice pullback. The second scenario, though, is if price goes higher. Right now, if price goes higher here, we have to assume this is going to start to develop into a channel. So we have to assume that's where they're trying to get to in the short term. Eventually, they'll probably have their eyes on that measured move, right? This measured move up at 62.89, right? That big measured move target. But for right now, though, we have to assume they're going to be trying to get at the top of that channel. So that we assume is the short-term objective if they can push through these highs. The basic principles of what I call a breakout, a successful breakout pullback, is to know where the objective was, in this case, 61.44. Get the moving average up above, and then here's the kicker. Look for a 2-legged pullback. And usually that 2-legged pullback will get just below the moving average. Okay, almost like we saw back here, right? Where it gets just below that moving average and then slams back higher. So that's going to be the follow through, right? That'll be if we see price accepting higher prices. If we see market going higher, right? And you can tell they're not stopping at this high. Now, with that, I'm looking at a potential spike in channel pattern, right? So you can see I'm drawing up these highs, right, as a potential spike in channel. So maybe this thing sets up here tomorrow, if I can draw here. Maybe it sets up here tomorrow right, where we do break higher, we can get that moving average up, right, and we can use the spike in channel, right, along with that 44 high. Obviously that would be an ideal scenario, right, if this price goes higher. If we don't get a chance to use this spike in channel, I might be wrong about the spike in channel, right? It might be even higher. Let's say, for example, that we just shoot higher here, right? We shoot higher, perfect. Now we start pulling back. Perfect. So now, same thing. Mark the high, mark the low, right? Get that moving average up, right? Pull back and go from there. Okay, so even if it does keep moving higher here, we still have enough information to put together a pretty good plan. All right, guys? So trading the probability, right, for the profitability, right? Which would you use, right? Give me an answer. What would you choose, right? More probability or more profitability? Are you okay with a low winning percentage but big profits? Or would it be easier for you to be confident and enjoy it, right, if you had a much higher winning ratio? Because you can always add more contracts. You can always trade a bigger position size, right? Leave me some comments below the YouTube video and tell me what you'd prefer, right? Or shoot me an email, jj@schooloftrade.com. So last but not least, right, the next kind of scenario here is, what if we go sideways? Strong move up, we pull back, we buy off the low, we retest the high now. But we don't go through the high. Right? We start going sideways. If we start going sideways here, now we need to focus on getting back below that prior swing, right, and be a buyer down there. So that's kind of the third scenario, right? One scenario, we blast higher, look for a spike in channel. Second scenario, we pull back, right? We got plenty of support down here. Third scenario, we pull back, we retest the high, right, but we don't go through the high still. That becomes a range. And anytime we have a double top, and you're going to see this in the euro and gold, so stay tuned for more on that. Anytime we have a double top on this, we always look left, find that prior swing, right, and dig in below that prior swing. All right, guys? Last but not least, how do we turn bearish? We definitely could turn bearish because, again, we're at the highs. So if we see a strong move down, a pullback to the moving average, and another strong leg lower, right, and we continue this move lower, now we know this market will turn short-term bearish. When that's the case, mark up those lows, mark up to the high, find that sell, right, going off of that high. All right, guys, so don't forget, we can turn bearish, but remember what we look for. Three things, right? Strength off the high, pull back to the moving average, and strength going forward, right? Strength going forward. And it's got to be a lot of strength going lower. You can see how the market went strong, pulled back, and tried to keep going, but you'll notice it didn't continue, right? So when it pulls back to the moving average, you're not thinking this market is bearish at that point. Trust me, when a market that was this bullish, when it turns bearish, it's going to fall apart. Right? It's going to collapse. It's going to tumble. It'll be really easy for you to tell it's a bear market. Until you have the information, look for those buying opportunities when it comes back to that moving average for seller failures. So buyers have some good targets overhead. Sellers definitely have a chance. But again, we got to wait for more proof before we go trying to sell this market tomorrow. So from one strong trend to another one, how about some S&P? Boy, the S&P here now looking razor sharp here, racing higher towards the prior week high. And with a spike in channel pattern, I know the best trading opportunities will likely be on a two-legged pullback down below the moving average tomorrow morning. Now, I'm using a really slow time frame right now. You can see this is a 15,000 tick chart. It's a very, very slow time frame. I like to use tick charts. I think they're easiest to use, and everybody's got charting software that can draw these days. The reason why I wanted to show this to you is I wanted to show you kind of the bigger picture here. First of all, drawing this trend line higher, right, bring it up to that high, that creates our channel. So we have this move up, pull back, right, move up, right? So the top of that channel, we have to assume that's the objective right now. Okay, so that's kind of the big picture look. Now, what do we have up here? Hey, there's the prior week high, right? That's last week's high, a big psychological level. We talked about this early in the introduction. On a Friday morning, we're always looking for examples of those prior week open, high, low, and close levels. The high, the low, and the close being the most important. So boy, oh boy, is this just a huge carrot at the end of the stick for all those bulls right now. Or, for the bulls, right, it's a big red flag being waved, right? Come and get it. That's a big, big magnet. Now, of course, the problem is we have a real strong trend, and we haven't pulled back to the moving average in a while. So now let's zoom in. Now we see the big picture on this. I also have that big measured move up there too, right? Prior week high, and of course that, back out real quick here, right? That measured move, right? So if I really zoom all the way out here, you can see, right, that big leg up, pull back, right? That will be the measured move there. So right now, 3 objectives for the buyers. 1 being the top of the channel, 2 being the prior week high, which I think is the biggest, most important for tomorrow, and 3 is that measured move. Okay, so we want to look for that to retest the high. It'll probably get up to that weekly high from there, and then maybe we get to that big measured move tomorrow. We'll see, right? We'll definitely see. Again, it's a holiday weekend coming up, so it might be a relatively short, relatively quiet session tomorrow, just because you never know what a Friday will bring, right? Fridays oftentimes can be either very, very good or very, very slow, and with a holiday weekend, you could say, you could justify trading it and saying, it's the last bit of trading before the markets close, right? So better get at it. Or a lot of traders look at the holiday weekend and they say, you know what? I don't want to worry about inconsistent volume. I don't want to worry about unreliable price action, right? And they'll trade a little bit easier on Friday morning ahead of a weekend, right? Or ahead of a holiday weekend. Excuse me. So it's a little bit difficult to tell what's going to happen tomorrow. What we do know for sure though is we do know we have a strong move up, a pullback, strong move up, pull back, and that's creating a spike in channel. Anytime I have a spike in channel, I know that everybody is most likely already long. And to attract more buyers, we're going to have to get a deep pullback. Now, there's a couple things going on right now. First of all, we have sellers, right? Short sellers who are probably still holding short positions after that big drop we saw 2 weeks ago. Yeah, 2 Fridays ago. Right? So a lot of this move higher right now are the bears, right? Sellers who are waving the white flag, getting out. So that's why this market has potential to really run tomorrow. It won't be buyers buying. It'll be sellers buying in the form of sellers covering their short positions. So we could have a very strong short covering rally tomorrow just because of those bears getting out of their positions. That might put us in a position where we may not get that many pullbacks, right, for tomorrow. But my plan for tomorrow, though, will be let's get back to that moving average, and specifically here, let's try to use some of these support levels. So anytime I see a spike in channel, I always want to look left, right? Find those support levels, find those support levels, find those support levels. I have this rising trend line coming up as well. In all reality, this whole area, right, this whole area could be my battle zone there for tomorrow. Again, I'm expecting this market will keep going higher. I want to wait for, right, that two-legged pullback so I can buy nice and low. But again, we may not be getting buyers entering the market right now. This may be more of a short covering rally, right? And what happens is when you have a situation where there was a big drop down, right? That was 2 Fridays ago, right, into last Monday and Tuesday, right? Well, what happens is when that big drop happened, right, we have a lot of short sellers now that are short the market. So now as we go, 1 try to retest a low, 2 tries to retest a low, once those buyers start, right, once those buyers prove the sellers are not going to be retesting that low, all of a sudden now what happens? All the sellers, right, who are in short, they start to cover their positions, and the market starts kind of just, again, racing higher. And it can be frustrating because it feels like who on earth would buy this high? But it's not the buyers buying, right? It's the sellers who are buying. So the pullbacks are very shallow. It's difficult to get really anything to work, right? So when you find yourself in these types of positions where we have kind of this short covering rally mentality, we're going to want to keep our finger on the pulse tomorrow morning. If we're not getting very deep pullbacks, then we know what's happening, right? It's a short covering rally, right? It's a bull market, but it's not a bull market that pulls back to support, right? Buying off support levels. It's a bull market that every time it pulls back, buyers are buying those red candles. Anytime it pulls back, right? Buyers are taking whatever chance they can, right, to buy as much as they can get into their in their account, right? So we know where they're hunting for. right? Now we're going to see what do, right? Does the market keep kind of blistering higher here? If it blisters higher here, we're going to be really aggressive on it, right? And be trying to get those traps. Okay, so be aware of this tomorrow. This is going to be all about feel. It'll be all about how the market feels as we go into that 9:30, 9:45, 10 o'clock hour, right? If it feels like this thing's not pulling back, we're not getting anything, no two-legged pullbacks, only shallow pullbacks. We're not getting two-legged pullbacks. We're not even pulling back to the moving average for crying out loud. Then you know what's going on, and we're going to have to just literally buy red candles. Right? Buy little trap lows, buy any pullback that goes. What I'd like to see happen tomorrow is I'd like to see a nice two-legged pullback, right? Down to that reversal line here at 19.5, right? Two-legged pullback into a failure, right? Like we saw on oil, right? But you'll notice though, right? All they got today was that shallow pullback and blasting higher, right? So we may not get that tomorrow. So, right? Two scenarios, right? One scenario, pull back to support, buying up from there. Second scenario, price going sideways. I doubt that'll be the case tomorrow, right? I'll be surprised if we end up going sideways tomorrow. I won't be totally shocked because again, it's a Friday, right, ahead of a long weekend. So I won't be totally shocked. But if it goes sideways, right, one try, two try, right, and buy off of that, right, buy off of that low. If it goes higher here, right, and again, if it starts blistering higher here, now we've just got to take whatever we can get our hands on, right? So it may not pull back to the moving average, little trap lows, right? We're probably not going to get that deep two-legged pullback if this has the personality that it could easily have here for tomorrow. So really your job tomorrow is we're bullish. Don't even think about selling this market until it turns bearish. If we get the two-legged pullback, find those prior levels of support and buy at those prior levels of support. If it goes sideways, be patient for a trap or two try below the range. And if it goes higher here tomorrow, right, watch the condition of the market as it goes higher. Okay, watch all the red candles. Because what happens a lot of times is market runs higher, get a red candle. What happens on the red candle? Do we see a green candle right back to new highs? That's your cue. Okay, that's your clue. You're going to have to take off the conservative hat and put on the aggressive trader hat. It's either that or you're going to watch the move go without you, and it's because it's probably not going to pull back. And it's all because of those bears. It's all because of that short covering rally. And in the future, the next time you see, right, for example, right, Monday and Tuesday are down, Wednesday's chopping, right, Thursday into Friday, right, now we've got one try, two try for the bears. You know this move higher is going to be aggressive. Not because buyers are buying, but because the sellers who sold short, they're now stuck and they're going to have to get out. And what happens is it creates this environment where we don't get these deep two-legged pullbacks. What we get is this little shallow pullback. Literally, it's red candles, right? Red candles are being bought. Okay, and I know it's tough. Believe me, this, in my opinion, is one of the hardest environments to trade. Because we kind of train ourselves to think, buy the pullback, buy at support. But these environments, these short covering rallies, and they'll happen where Monday and Tuesday's down, Wednesday's transition, Thursday and Friday, it's blasting higher, right? And you got to pick up on that once you see buyers buying those red candles. Okay, and you'll know what I mean, right? The moving average is here, and we're going, when is this going to pull back to the moving average? It never pulls back to the moving average. At that point, you got to say, okay, I'm either going to do nothing with this, or I've got to start buying whatever red candle. Big red candle, buy it. If it goes lower, buy it again, right? It'll go right back to that high again. Okay, and you know where they're going. They're trying to get back up to where that move started that big bear run. So that's the kind of the scenario right now. It is not easy if the market keeps running higher tomorrow. So watch out for it. And now you know the psychology, the mindset of the market, and you can prepare for it, right, and capitalize on it. Very similar scenario here on the Nasdaq. The Nasdaq also bullish, trying to finish rotation up to this massive bull channel. But the prior week high will likely become a price magnet that will be hard to avoid. The bulls have control with a strong run higher, telling me there will be great buying opportunities when price gets below the moving average. But again, we know where they're trying to go, right? We know that this is right? That big short covering rally, and we know where they're trying to go, right? They're trying to get all the way back up, right? They're trying to go back up, right, to that big high that we had before, right? So that's where they're trying to go. They're trying to get all the way back where they came from. So if this escalates, right, if this starts really running, now you know the mindset of the market, right? And to be prepared for that for tomorrow. So clearly here, very similar to the S&P. I don't want to take up too much of your time here tonight, right? Very similar here to the S&P. We have that nice strong channel. We have to assume that channel is going to be their objective. So the goal would be, obviously, if we do see this market continue higher here, right, waiting for that move back down, right, to retest that low. That would be ideal, wouldn't it? Yeah, but again, might not happen tomorrow because of that short covering rally, right? That sense of urgency that we have right now. At the same time, a huge measured move. And this measured move is no joke, right? I mean, there's really nothing else you can use for it. That's the measured move, and look where the measured move puts you. I mean, it puts you right back to that big high, right? I mean, it's all lining up there. Measured move, prior month close, 7,000 big round number. Now, obviously, this is way too ahead of ourselves here to be calling 7,000 right now. But that's where the big targets are. Probably not tomorrow, right? But early to mid next week, if we get a big run tomorrow and we go to a low volume day on Monday because of the holiday, absolutely, by Tuesday, Wednesday, we could be up that far. Obviously, that is way too ahead of, right? I don't want to put the cart before the horse here. Right now, we know the bulls have control. Another thing here, right? Another thing, look where we are. Now, remember on the S&P, right? The S&P, there we go, right? The S&P has that big flashy object, right? That big shiny target, that big red flag for the bulls, right? Right? Trying to get those buyers excited. Right? Well, the Nasdaq's already there. Right? The Nasdaq's already at their prior week level. So there isn't as much of a carrot at the end of the stick, right? Nothing kind of antagonizing those buyers or giving the buyers a sense of urgency right now, right, as there are on the Emini. Okay, we also have a beautiful reversal line here at that 54.5 area, rising support trend line. This area right here gets me excited about that pullback right off of that low. So we know what we're dealing with here in the Nasdaq, right? Strong bull run. What if price goes up? What if price goes down? What if price goes sideways? There are ultimately 4 scenarios you want to be ready here for tomorrow. 1 is pullback. 2 is sideways. 3 is a kind of a typical bull run. And 4 would be that blistering higher short covering rally that we talked about right at the beginning of this E-mini section. So first of all, now that you guys know what a good two-legged pullback looks like, we saw a beautiful example on oil, two-legged pullback, failure at the moving average, right, and then back up to retest the high, right, or should I say failure into pullback, and then back up, right, to retest the high. So that's obviously what we're looking for here if we can get that pullback here tomorrow. Right? And don't be afraid if the market runs a little bit lower than this, right? I mean, I put the battle zone on here as just as a general area, but don't be afraid if it goes through the battle zone. Remember, they still have to hold that pullback and run lower on strength. So even if it pulls back a little bit further, don't be afraid of that seller failure into a pullback going higher again. I try to anticipate where these areas are, but, I don't have a crystal ball. I need to wait for the market to pull back to those support levels. Then on a faster time frame, I'll look for these specific entry triggers, right, before we go jumping into the market. Right? I'm not blindly buying these support levels, right, and neither should you. Okay, we don't do any blind trades at all, right? I don't care how important the level of support or resistance looks. Right, or how good the indicator signal is, right? You always want to wait for the proper trigger. Make sure you get a good signal to get into that trade. So that's if price pulls back. What if price goes sideways here? We're at the prior week high, so that's definitely possible here for tomorrow. You're going to know we're going sideways if we make a double top. If we see a double top, right? If we see a double top on this, and again, it doesn't matter where, right? Anytime we have a bull market pulling back, going higher, pulling back, going higher, pulling back, going higher. That's a bull market, right? Yeah, keep buying pullbacks. But the minute we pull back and retest and we don't go higher, that's the minute now this becomes a range. And the range easily tells me, look left, find that prior swing. And then what I like to do is, I like to look even further down the road, right? Find a prior reversal line, right? And use that right, as my little zone, right? Then once we have that trading range, now all we got to do is look for seller failure. Seller failure, one try, two try, and back up we go, right? One try, two try, and back up we go. So that's the plan. Again, if it pulls back, retest the high, right? But we never go through the high. Now that becomes a trading range, and now we go below that low, one try, two try, right? And back up we go from there. Okay, now, third scenario, right? Scenario number one, or should I say, third scenario is the bullish scenario. There are two different things to consider. One is going to be a strong move up, finish off that rotation, and then we pull back to the low, right, and look for that buy. That will probably come, middle morning tomorrow. If we're lucky, it'll come before 10:30. Okay, but we may have to wait for that. Okay, now what happens though if we come in tomorrow and we're blasting higher, right, holding above that high, and this thing's running, right? It's running. Again, we know the mentality now, right? It'll be short covering rally mindset. What does that mean? That means when you ask yourself, who in the hell's buying up here? Why would they buy? What did I miss? What news event came out? What's going on? Why are they buying high like this? It's not the buyers. It's the sellers. They're the ones that are buying. They're not getting long. They're getting out of short positions. And many of them might be hitting the reverse button and, right, covering their shorts and getting long on top of it. Right? So, again, this is the mindset. This is the psychology of the group of people that we have to be considering here for tomorrow. So one scenario would be up, pull back, right? Buy off. Hey, maybe use that prior week high along with that channel low, right, as the buy from there. What I'm keeping an eye out for tomorrow, though, is we may have one of those really strong runs, right, where literally any big red candle, right, becomes your next buying signal. It's uncomfortable. It's not really that fun. I mean, it's fun if you're a rookie because it's just easy, right? But anyone with experience knows that these are very, I don't want to say rare, but they are very unique situations, right? They require earlier on in the month or earlier on in the week, in this case, a big move lower, right? Once we see the sellers have tried a few times and the buyers start seeing life, like we're seeing right now from the Nasdaq and the S&P, now we know those sellers who were so excited about calling the top, right, for a long-term pullback on the S&P and the Nasdaq, now they're starting to shake a little bit. They're getting a little bit worried, right? They're going to start covering their short positions and become buyers. Okay, so keep that in mind. And again, right, if we see that example tomorrow, if we see that just strong move higher, that short covering rally, I would definitely suggest leave a portion of the position to run into the close. I wouldn't hold it into the weekend, right? But just literally set that final target, leave one contract, smallest piece of the pie, leave one contract as a runner, right, to run up to that measured move. Leave your stop at point of entry and just literally leave the room, right, until the end of the day. And it will probably, if it gets like that tomorrow, it'll pull back a little bit, right? So you don't want to get shaken out with a trailing stop, but most likely if it does end up being that short covering rally tomorrow, right, it'll likely finish right up at its highs, right, and you'll be rewarded handsomely for it. Again, it's all about personality, though, tomorrow. We're going to see clues on that probably shortly after 8:30 a.m. Eastern Time tomorrow. By 9:30, it'll be pretty darn obvious to see what happens at the opening bell on the E-minis. All right, I'm running late on time. I appreciate you guys sticking around with me. Let's wrap up on gold and the euro tonight. Gold is bullish with a spike in range pattern just above the prior week high and trying to reach the prior month high maybe tomorrow morning. The bulls have control, but I don't trust buying into the highs because the buyers tried and failed multiple times earlier in today's session. So my plan is to wait for proof of a successful breakout pullback or look for more reliable buying opportunities using the 2-try rule down below the low of this range. Now, we talk about this quite a bit, right? In fact, we've already discussed this plan quite often here already tonight. Strong move up, pull back, right? Can't get through the high. Now we know we have a range, right? Look left, find that swing. Now we have a range, right? Strong move, pulls back, retests the high, doesn't go through the high, right? Pulls back off the high. That tells you we're bullish. We're just not accepting higher prices, right? It's called price rejection. When that happens, I look below the low of that range. I try to look left and find some of those, reversal lines, right? Like I talked before, think about something like that, right? Find like a reversal line there, right? And use that as the buy zone. Okay, then what I want to do is, if I have that reversal line now, right? 1 try, 2 try, let those bears try once. Most breakouts fail. Twice, and then back up into that range we go. On the flip side, this is the tough part. On the flip side, as it goes higher, I want to get that moving average up. Strong move higher, and because the moving average has to get above the top of that range, it has to be a real strong breakout, right? Then 1, 2, two-legged pullback, and I'm telling you, it'll usually go just below that moving average, and that will usually be your clue, right? It might not pull back to the top of the range. It doesn't need to be the top of the range. I just want to make sure it gets at least, if not below, that moving average on a two-legged pullback. That is usually where the best trades are going to be, right? So buy below the low of the range, buy above the top of that range, right? This is your typical spike and range pattern, right? It's a bull market, strong bull market higher, right? They pull back, they retest the high, but they're not exploding through the high, right? Like this, strong move up, pull back, explode through the high. No, they stalled out at the high, right? So we look left, find that swing, and this morning in our trade room, right, we were finding buying opportunities off of that low. Well, now we haven't gone anywhere, right? We're still here now. I've extended out that range wider, right? Look left, get the prior week high acting as support, right? Get some prior swings here acting as support. Heck, even got a beautiful reversal line down there at 39.4 acting as support. So, two options here. 1 try, 2 try, back down in or back up in. Again, don't be afraid here if it does 1, 2 down to that reversal line, right? Don't be spooked by that. Make them come back to the moving average. Look for the failure. Up we go from there, right? So don't be spooked by a relatively big move lower because you've got structure to rely on. Now, if they come in, right, they come in and they blast through that low, okay, now we know this is no longer, right, a bull market. Now I'm going to draw off those lows, pin to that high, right, and look for that sell off of that high, right? Strength, pullback, strength. Okay, so it's got to be a real strong move lower if we're going to want to sell this market. Okay, I'm not saying it can't happen, but it needs to be real strong, right, if we're going to be able to trust it. Next, what if it goes higher here? This is where things are a little bit interesting here. I've drawn up this trend line off the highs, copied down the lows, and it's creating what looks to be like a spike in channel. Now, here's where you've got to be careful tomorrow. If we do get that strong move higher here, watch the top of that channel. Because if it hits the top of that channel, then we're probably going to see this as a spike in range. And we may run into problems here at the top of this channel again. So a couple scenarios if price goes higher. What I really want is, I want to see it go right through it, right? I don't want it to look like anybody even cared about that channel high. Makes sense, right? Then that'll bring the moving average up. Then we can find that two-legged pullback and we can buy from there. Okay? Other scenario, we go up, we clearly see at the top of that channel. That tells us careful now, because now we'll likely want to be buying down off the low. If that's the case, get down at that low, 1 try, 2 try, and look for that buy off the low. All right, so it's going to be a little bit careful here. Watch that high, right? So 1, 2, back up, 1, 2, reversal, right? Pull back, can't break through, back to the low, buy there. Almost like a head fake, right? Or strong move through, two-legged pullback and go, right? Don't even care about that high. Okay, there is also one potential scenario tomorrow, and that is where it may pull back, 1 try, 2 try, and it may not be able to go back and retest the high. If we see a pullback and they can't retest that high again, you know what the problem is. It's the prior week high. If it pulls back, 1 try, 2 try, beautiful signal, right? But it can't, right? Back away, right? Back away. Because what will happen is it'll eventually drop, right? And then it'll be either a reversal or it'll be a trap low and back up again. right? Because there'll only be so many buyers buying here, once, twice, three, four, right? They're not going to buy forever. So if we can't get back to retest that high, I always like to use the 2-try rule, right? If they do it once and can't get it up, right? They try it once, can't get it up, try it again, can't get it up again, right? 2-try rule, once and twice. Then we know, okay, something's wrong. It's the prior week high. When that happens, it'll usually dump, right? Because there's only so many bullets in the chamber. There's only so many buyers that will buy that pullback. Once they run out of those bullets, it's got to pull back deeper to attract more buyers. And that's when reversals happen, right? That is when reversals happen. When buyers try to retest the high a couple times, they can't. They keep trying, they can't. They give up, right? And the price collapses. And then we may see a very dramatic reversal here tomorrow. Or it may just end up sitting, right? 1 try, 2 try. It may just sit here, right, for the rest of the session around that prior week high. So that's the stuff we're thinking about here on the gold. I know there's a lot going on right now on this, but I'd rather be ready for the battle, right, than be unprepared for it. So now you know some different scenarios to wait for tomorrow. And then here on the euro, very much the same pattern we saw on gold. A lot cleaner. This is a lot prettier chart than gold, but same basic fundamentals here, or same basic technicals, I guess. Euro is bullish. Spike and range pattern. We're trading sideways at the prior week high and most likely trying to push up to that prior month high if the bulls can get through this resistance area at the highs of this range. The buyers have control, but we can't trust buying the highs because we've seen the buyers fail already. So I'm looking for buying opportunities below the range, use that 2-try rule, or a successful breakout pullback going higher. So I think on this one, well, this will be pretty easy, right? There definitely isn't the risk of that spike in channel. Right? See the difference here? On gold, we can see evidence that there's potential for a spike in channel. We did have technically a new higher high. And if I draw off that high, I can see they're holding that low. That's what tells me to be worried or just be aware of the potential for that spike in channel. On the euro, we don't have that. In fact, the euro is more like a triangle. Right? So the euro is a true spike in range. Strong move up, pulls back, can't make new highs. That creates the range. We pull back, right? We're range bound. 1 try, 2 try, back up in. Again, I got a bunch of support levels here. Swings, reversal line. Okay, if we go higher here, get that moving average up. Strong move up. Remember, got to be strong to get that moving average, right? And break through from there. All right, guys? So beautiful chart here. Now we need more information. If tomorrow morning, if we just sit here around that prior week high, you know why, right? It's resting comfortably at its objective as it goes into the end of the week. All right, so pretty easy finale there on the euro. So spike and range on the euro, spike and range on the gold with a little twist of a spike in channel. Nasdaq, right, short covering rally. They're not wasting time on that. S&P, short covering rally potential. And again, over here on oil, we're waiting for either acceptance, right, or rejection. We're waiting to see where we go next on the oil. Boy, oh boy, that time flies when you're having fun and making money. Hope you guys found value in this newsletter. Remember, I do not publish my newsletter on Friday afternoons, and we do have a long weekend. So the next time we'll work together, if you're not a client of mine, is going to be next Tuesday afternoon for our next nightly newsletter. If you would like to become a client of mine, right? We have helped literally over 3,000 people have graduated here from the School of Trade. I've been running my trade room for 10 years now. We opened up in 2008. From what I can tell, longest running on the planet. If you want to learn more about membership, if you want to just see what we're all about, go to the website at schooloftrade.com. I'll put all the links in the description of the YouTube video, right? Join the free trial to learn more about our trading strategies. I'll shoot you a free pass. Come out and join our trade room. And also, don't forget, we have beginner, intermediate, and always very flexible payment options for our advanced membership. Guys and gals, any questions, post those questions in the comment section below the video, or drop me an email at jj@schooloftrade, or hit me up on live support on the right-hand side of the website. If I don't see you guys tomorrow morning in the trade room, we open up our trade room 8 o'clock Eastern time, Monday through Friday. I will see you guys same time, same place on Tuesday. Have a wonderful President's Day holiday weekend. Be safe out there. Be well. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye.